Welcome. Today, we are diving deep into how to decode the story that's hidden inside every single financial chart. We're going to learn to speak the market's language, a language that's written in price and spoken with conviction. When you first look at a trading chart, it can feel, pretty overwhelming, right? It's just this chaotic mess of lines and colors. It's so easy to think it's all just random noise, totally impossible to predict. But what if it's not? What if every single one of those charts is actually telling a story? A story about the constant epic battle between buyers and sellers. A story about fear and greed and hope. The thing is, you just need to learn how to read it. And that's exactly what we're going to do. So, where do we even start? Well, we start with the absolute basics, the alphabet of this language, the candlestick. Every single one of these little shapes is just packed with information about what happened during a specific slice of time. Okay, see the main, thick part of the candle? That's the body. I want you to think of this as the battleground. It shows you the result of that tug of war between buyers and sellers. If the body is green, it means the price closed higher than it opened. The buyers won that round. If it's red, it closed lower, and the sellers took control. Simple as that. And those little thin lines you see sticking out the top and bottom, those are the wicks, or sometimes people call them shadows. These show you the absolute extremes of the battle. The upper wick shows you the highest point that buyers managed to push the price before sellers stepped in and said, nope, not so fast. And the lower wick? That shows you how far the sellers dropped it before buyers jumped back in and said, this is a bargain. So, let's break it down. Every single candle gives you 4 crucial pieces of information. The open, that's the starting line. The high is the peak of optimism in that period. The low is the peak of pessimism. And the close is the final verdict. It's the market's ultimate evaluation. And honestly, a lot of traders think it's the most important price of all. Okay, so if candlesticks are the words of our story, then what's volume? Well, you can think of volume as the tone of voice. It tells you just how loudly the market is speaking. It reveals the emotion, the conviction behind every single price move. I mean, sure, on a technical level, volume is just the total number of shares traded. But what it really measures is participation, interest, and most importantly, conviction. A price move without much volume is kind of like a whisper. It might not mean anything. But a big price move with a ton of volume, that's a shout, and you should probably listen. Let's really look at the difference here. High volume is your confirmation. It means there's real money, real belief behind a move. It validates what you're seeing. Low volume, on the other hand, that raises some serious questions. A huge price jump on super low volume could honestly be a trap because there's just no widespread support behind it. All right, so we've got our letters, the candles, we've got our tone of voice, the volume. Now it's time to put it all together and actually form some sentences, right? Let's walk through 6 core principles for reading the market story. Let's run through these. First up, always focus on the wicks. They tell you where the power really shifted. Number 2, a candle with no wicks at all. That signals pure, unfiltered, decisive dominance. 3, body size totally matters. A big, wide body shows strength. A skinny one shows weakness or indecision. 4, context is everything. A candle means one thing at the bottom of a trend and something totally different at the top. 5, and this one's huge, volume most validate price. And finally, number 6, if the story seems confusing, just change your time frame. Zoom in or zoom out to get a new perspective. I'm going to say this again because it's that important. If you take away only one single thing from all this, make it this. Volume validates price. Price can sometimes lie to you, but volume often reveals the truth. A price move is only as believable as the volume that backs it up, so you always check the volume. Okay, enough with the theory. Let's see how this actually works in practice, in the real world. We're going to walk through a simple chart pattern and read the story that price and volume are telling us together. So check this out. Here's our setup. We see 2 green bullish candles, one right after the other, with the second one closing even higher. At first glance, this looks like a slam dunk, right? It seems like buyers are in total control, the price is heading for the moon. Or is it? But then we add volume, and boom, here's the plot twist. Take a look at the volume on that second candle. The price range was actually smaller than the first one. It didn't move as much, but the volume was dramatically higher. It went through the roof. Now that's a contradiction. That's our clue that something else is going on under the surface. This is the million-dollar question you have to ask yourself. If there was so much frantic activity, why didn't the price shoot straight up? All that trading, all that volume, had to go somewhere. This is the moment where we stop being a passive chart watcher and we start being a market detective. So, there are two primary stories that could explain this whole situation. Possibility A, the bearish case, big institutional players are quietly selling all their shares to the excited retail buyers. They're creating this invisible wall of supply that stops the price from rising. Or there's possibility B, the bullish case. Those same big players are actually buying up everything the sellers can throw at them, just absorbing all that supply before they make a massive push higher. So which is it? The secret selling or the big guys buying it all up? How do we find out? Simple. We let the very next candle tell us the end of the story. If it's a sharp, nasty move down, that confirms the hidden selling was real. But if the price breaks decisively higher, that confirms the big money was just getting ready for the next leg up. That final candle is the proof. So let's wrap this up. What are the key takeaways? Just remember this. Candlesticks show you the battle. Volume reveals the conviction, and you absolutely must always use volume to validate what the price is telling you. When you put them together, you're not just looking at a chart anymore. You are reading the psychology of the market itself. So I'll just leave you with this one thought. The next time you pull up a chart, are you just going to see a random bunch of lines and colors? Or are you going to see the story, the battle, and the psychology playing out right in front of you? Thanks so much for tuning in.